So, why is nobody talking about things that traders should also consider while trading?
A very important factors to consider while trading is the trend of the economy itself, the trend of the sector, and the trends of the stocks. These three factors have to be combined together for you to be able to pick the right stock in the market. So let's say right now the Indian economy is doing fantastic. We have a fantastic prime minister who is helping India grow, make in India, many policies to help businesses grow. All that is happening. So there's a huge development that is happening in India. When development is happening in a country, most likely the market is going to be in a particular trend, especially when everyone's the GDP is growing and everyone's income is growing. You have more surplus amount of money coming in, and when surplus money is there, you're definitely going to be buying more things, and buying more things will eventually result in more profits for the company. And this will generate growth in the market. Now, the second thing is to understand sector, which sector is actually performing well. Is it pharma? Is it IT? Is it auto? Which sector is doing really good? Where a lot of development is happening, industry support is happening, money is flowing into that sector. These are sectors where you can focus and have a good probability of finding a strong bullish stock. So let's say right now AI, tech, and pharma is like hotcakes right now. So these type of industries, when you know there's a lot of money coming into these sectors, you can potentially enter and capture part of the trend. Next thing is a lot of people don't focus on the fundamentals of the stock. It's very important to understand the fundamentals of the stock. If you put money into a company, the company has to be doing good. It must be building business. It must be increasing its capacity to earn. It must be employing more people. All these things has to happen. If that is not happening, the business will not grow. And why would you put money into something that is not growing? But a lot of people, they just see the technicals, they see the charts, and they blindly put a big sum of money into the chart without actually understanding what the business is doing. So that's one of the major mistakes the traders do, which has to be rectified. Also, it's very important to manage your risk properly. Just because you know that this stock is going to perform well doesn't mean you put all your money into that stock. It's important to diversify part of it. So put in one sector, put a little more amount in another sector. If you have many sectors, even if one or two sectors don't perform according to what you expect, the other few will cover up for it and keep you safe and earn you money.
What's your formula for risk management?
There's no particular formula. It depends on the asset. If I'm investing, then I believe that entire amount is my riskable amount. If I'm investing 1 lakh, you would say close to 50,000 is my riskable capital, which I'm deployed into that. If I'm trading like a swing trade, I generally keep a 0.3 to 0.5% risk on the deployed capital. And if I'm trading options, then I use hedge strategies where my risk is defined. I know exactly how much money I'm going to lose if I enter that strategy. So depending on the asset, the way you're going to manage risk will also change. This is the base level of risk management. Now, when you go one level higher in risk management, let's say in options, you have the ability to play both the directions. So you can have a combination of bullish and bearish strategies. If the market goes down, your bullish strategies will lose your money, but your bearish strategies will make you money. When the market goes up, the bullish strategies will earn you very good, but what the bearish strategies will lose is very little. So you can further manage your risk by having options and playing both sides of the market.
Got it.